In today's video, we're talking about something huge that could affect economies all around the world: China's deflationary cycle. China has been facing some serious economic challenges, and deflation is one of the biggest. So, what exactly does this mean for the global economy? First, let's talk about what deflation is. Deflation is when prices for goods and services start to fall, and it usually signals that there's a lack of demand in the economy. While lower prices might seem like a good thing at first, it can cause serious problems. When people aren't buying things, businesses make less money. That leads to lower wages, job cuts, and even less investment. In a deflationary cycle, this continues to spiral downward, causing more damage to the economy. Now, let's get into why China is experiencing deflation. For one, the property market in China has been struggling. For years, the country's property sector was booming, but it's now in a deep crisis. Property developers have accumulated massive amounts of debt, and many projects are now stalled or unfinished. This has led to a lack of consumer confidence, which means people aren't spending as much. When housing prices are falling and people are reluctant to buy homes, it slows down economic growth in a major way. Another issue China faces is weak domestic demand. Despite having the largest population in the world, people in China are spending less. There are a few reasons for this. China's population is aging, meaning there are fewer young workers to drive the economy. The effects of strict COVID-19 lockdowns are still being felt, and many people are hesitant to spend their money. So, businesses aren't seeing the demand they need to keep growing. And let's not forget about China's exports. The global economy is shifting, and the demand for Chinese goods has been falling. Countries are increasingly looking to diversify their supply chains, and geopolitical tensions are also playing a role. When Chinese exports decline, it affects the entire global economy because so many countries rely on China for goods and raw materials. So, why should the rest of the world care about China's deflation? Well, China is a huge player in the global economy. It's not just a major producer of goods but also a major consumer. If demand for Chinese products drops, it's not just China that suffers, it has a ripple effect. For example, countries that rely on exporting to China, like those in Southeast Asia or even the US, will see slower growth. China is also at the heart of global supply chains. Many industries, from technology to automotive manufacturing, depend on Chinese factories for production. If these factories slow down or close, it disrupts the flow of goods worldwide. Companies across the globe could face delays and shortages, which could push up prices for consumers everywhere. China also receives a lot of foreign investment. If its economy weakens, investors might start pulling their money out, and that could cause problems in other emerging markets that depend on Chinese trade and investment. It could lead to market instability and slow growth in those economies as well. One more thing to consider is the impact on global commodities. China is one of the world's biggest buyers of raw materials like oil, copper, and iron ore. A decrease in demand from China could cause prices for these commodities to fall, which might seem like a good thing for other countries. But it could hurt economies that rely heavily on exporting these materials, like Brazil and Australia, leading to job losses and economic slowdowns in those countries. If China's deflationary cycle continues, it could even push the global economy toward a recession. As global growth slows, people around the world could see job losses, reduced consumer spending, and more uncertainty about the future. So, what needs to happen to fix this? Well, China will likely have to take action to stabilize its economy. This could include things like lowering interest rates to encourage spending, or offering stimulus programs to boost consumption. It might also need to inject money into struggling sectors like real estate to get things moving again. On a global scale, it will be important for countries to stay connected and keep trade flowing. Central banks might need to work together to prevent economic conditions from tightening further, which could worsen the situation for everyone. In conclusion, China's deflationary cycle is a serious issue that could have wide-reaching effects on the global economy. While it's a challenge, it's also something that needs close attention because of the potential ripple effects. What do you think? Could China's economic struggles drag the global economy into a recession, or will it stabilize soon? Let me know your thoughts in the comments below. And if you found this video insightful, don't forget to like, share, and subscribe for more updates. Thanks for watching, and I'll see you in the next one.